Professor Michael Rosemann, who's the head of information systems at the Queensland University of Technology. Michael's forte is revenue resilience. And I think that seems a desirable gain for most people running organizations today. Michael's going to lead a panel against 3 peers in the industry around this topic. So could we please welcome Michael Rosemann?
Thank you so much, Peter. Welcome, everyone. We started late, but with German precision, we will land you at 11 o'clock, so we're back on track. It's a great pleasure to be here. As Peter highlighted, I won't be on my own, so I'd like to introduce the panelist, a gentleman with the most attractive job title in the country, the revenue strategist of CS Energy, Darren Busine. Thank you. A man of many hats, Jeremy Cooper, managing partner. He was at Victoria Market for Deloitte. Now he's the CFO, but also heavily involved in the M&A activities and advisory services. Jeremy, welcome. And then, of course, Craig Tindale, keynote speaker later. For 30 years has guided complex transformations in all kinds of industries and organizations, and on 90 pages wrapped up his thoughts on how the Australian economy is rather fragile, and this has led to 500,000 downloads. Craig, fantastic to have you here on stage. I want to give you 2 minutes of introductions, and then we fire up. And I said to my colleagues, we make this a kitchen table conversation, short, sharp, provocative, and we invite you. So the better the questions, the better the answers. My 5 cents, very simple. Most organizations, and our first keynote speaker spoke about it, are very good on operational efficiency gains. Most of you are using the term pain point and not opportunity point. And what we do is, over time, become very, very efficient. That's all fun, but in the age of disruption, it is the green line, the revenue curve, and not the red one that is in danger. And revenue resilience is very simple for us, the definition, when you make sure that green is higher than red. Textbook, MBA, semester 1. Majority of our activities are on red. I like to highlight Kodak, 2 days before they died, were published as a case study on process automation. People admired how paperless Kodak was. So you can have a factory that is streamlined and very efficient, but you won't have no customers. So in the next 31 minutes of your life, we want to nurture the idea of revenue resilience. We did a little survey, and I appreciate that roughly 20 of you took part in that. That's an online toolkit, and over the last years, we developed this with organizations like Woolworths, Australia Post, Suncorp, and others. And that's about understanding what threats exist to your revenue base. So what you see here is the feedback we got from you. And sorry, I think the formatting is slightly misplaced here. But you see a number of threats. Something like customers are becoming autonomous. Communities become a competition. We will share the correct formatting of those slides. But you can see there are threats all over the place. And the most common one were customers are expecting a proactive service. In the digital age, I expect that you come to me. I won't come to you. I remember talking to one of the big retailers in the country, and they realized nobody comes to my webpage because Alexa collects you in the kitchen. That's a proactive service. And what we want to do here now is work out where is your industry. So with my colleague Tom Davenport in the US, we did a study, and on a scale from 1 to 5, we tried to line up where are you and where's your industry. Thanksgiving is coming up, and on that day, you want to be butcher and not turkey. The more you're on the left, the more you're a turkey. And what it means, the further you're on the left, the higher it is that trends, demographic changes, increased digital literacy on the street, new business models, or technological changes will gobble up your revenue. And what we will now explore is in our panel conversation is, what can I do if the true threat is on revenue resilience, but our tendency is to work on the red line, to do what we do well, and cut costs, and then one day waking up and realize we are turkey and not butcher. So what I'd like to do now is open up the floor in our little kitchen conversation here to 3 highly gifted gentlemen and talk about the idea of revenue resilience. So maybe, Craig, if I can start with you, what do you see as the main threats? And we want to talk about awareness, acceptance, actions. In terms of awareness, what do you see as main threats to the revenue base of Australian organizations?
Well, I think they come in two categories. One is the macroeconomics threat. And I think Australia, by and large, is watching the sunset of property, mining, and China boom. And we're standing at the end of the lake, marvelling at the sunset, and there's a bunch of bears coming at us from behind. And not everyone's aware of some of those bears. And I'm going to talk later today on the keynote about that. And I'm going to identify some of that. I guess the second part is the frameworks to understand the disruptions that may be coming along for each of your industries. I've spent a lot of time at Stanford and Columbia working with US companies and professors on frameworks on how to do this and how to recast the CFO role in a framework that allows you to better identify these threats, both macro, micro, but the other part of it is also how to convince your organisation to move along, and that's the most important part, because unless you can do it in a disciplined, constructive way, you may understand what the issues are, but you may not be able to cover that with your organisation.
And Jeremy, so you on the far left, Deloitte Professional Services.
Yeah, slightly alarming.
An organization like Deloitte, what's happening internally to understand the security of your revenue base?
Yeah. So, I mean, in a sense, this conversation is interesting because we are really in the business of disruption. So we are in the business to serve our clients. Our clients are being disrupted, whether they choose to be or not. And so the growth that we're seeing in our highest growth areas is really working with our clients who are being disrupted. So, in a sense, our business model is all about that, working with them through that. But at the same time, we have for many years now, we've had an ethos around, the kind of the 3M model of, we want to constantly renew our revenue sources around things that we didn't do 2 years earlier. And so we're constantly reviewing how we're doing things differently and trying to, in a sense, disrupt ourselves.
So, to put you on the spot, Jeremy, looking at the current revenue that you have, to what extent do you think the current revenue base is in danger? If you wouldn't do anything else, Deloitte in 5 years, are there any revenue streams that you think will not survive?
I mean, the obvious ones that people would talk about were the sort of traditional attest type functions around the audit and tax, right, where there is clearly a technological threat to those. They can probably be done more efficiently by, with more technology there. But they're a minor part of our business in terms of our overall revenue split these days. That's both.
So do you believe this diagram is not correct?
I think that's probably not correct. I would disagree with that finding.
Yep.
I think I don't want to sound complacent, but I think the fact that we are seeing so much growth, whether it's finance transformation, whether it's digital transformation, tech transformation, whether it's a more sort of prosaic things around conduct, we're seeing these waves of disruption in industry, and that means that our clients need us more than ever.
Yeah. Now, that's quite interesting. We go from an organization that is global, digital, service-intensive to an organization that is asset-intensive, focused on one product. CS Energy in Brisbane. Darren, take us through a day in the life of a revenue strategist. On a Monday morning, 9 o'clock, how do you build up awareness for revenue threats? And you probably you can see it somewhere in the middle here, energies and utilities.
Yeah. So look, as a former CFO, I've done all of the stuff that you've talked about in terms of focusing on costs. And as an organisation, we were, up until about 18 months ago, very focused on costs because the traditional revenue, the traditional electricity industry was pretty much one where generators did their job, which is, I'm part of a generator. Over time, through cycles, there'll be too much supply, not enough supply. Not enough supply means that people come in, so you respond to those cycles, and that's what your life looks like. Over the last 10 years, the world has changed a lot in terms of alternatives, and from many different dimensions that are driving that change. So my job as a revenue strategist pretty much came out of our realisation some 18 months ago that said, if we keep doing what we're doing, which is being really good at trying to continue to be an efficient generator, we're not going to be a sustainable business. We're not going to be here in 10 or 15 years' time. So my job now says, okay, what game are we going to play in, and how are we going to be good at playing in that game? How do we look at what's happening in the macro trends? So, it's been 10 years since a coal-fired generator has been built. Unless the government gets their way in terms of, sort of financing and funding that sort of stuff, you may not see another one in Australia. So we can continue to sort of try and maintain our position there and try and keep alternatives coming out, or we can decide that we have to be part of that trend. And so that's a lot of what my job is about, saying, okay, what are the trends? What does it look like? What are the timeframes? What do we need to be investing in, and how are we going to go about it?
Same question to you, looking at your current revenue base. To what extent do you believe the current revenue base is in danger?
So we're probably in a period at the moment, we're in an industry that's going through transition. So our assets will probably still be operating in 20 to 30 years' time, but what the price that we can get for those is going to continue to be under pressure. So we need to look at, part of what I'm looking at is, okay, so you've got an existing asset, how can you use that differently in the world that's changing? So how can you partner with others, for example, and provide our generation at times when others can't? So when the sun's not shining, the wind's not blowing, yes, batteries are coming, but how can we change the way that we profile our assets and get those into the mix in a different way? We've set a goal at the moment that says by 2030, we're going to have 30% of our revenue from other sources. That's our longer term goal. I think the next couple of years, you're probably not going to see a lot of change, but I think the pace of change over that period then out to 2030 is going to be quite dramatic for us.
So we talked about awareness. Now, when it comes to change management, whether it's people or companies, it's about awareness, acceptance, and actions. Whether you're a CEO or an alcoholic, it's always the 3 stages. We talked about awareness, and what we try to do in our workouts are to pick up early signals. So if you, let's say, what we call share of events. So if you lose your share of events, you don't know what's happening in the life of an organization, and Facebook and Amazon is increasing their share of events, then that could lead to loss of market share. Now imagine organizations are aware that their revenue is in danger. Craig, you've for 30 years done complex organizational transformations in a variety of organizations. How do you socialize that sort of threat? I spoke to a CFO recently, said, I know that in the insurance business, pockets of revenue will disappear forever. It's just my colleagues are driven by quarterly results, by the red and not the green light. My awareness can't be socialized. How do great CFOs or CEOs socialize and build acceptance for revenue resilience and not just operational efficiency?
I think with frameworks, I think with thinking models that allow you to look at every part of a problem and to identify what the risks are in a way that is believable. I put some of the biggest changes through Telstra in the 90s, and much to, I think, half the organisation wanted to fire me and the other half of the organisation supported me. And what we focused on was the data and the frameworks and the thinking models that we applied to these problems so that we could, I guess it was a political campaign in many ways, and it's a political campaign for many of the people here, is that if you have good frameworks, if you have good thinking models, if you can think along multiple horizons and multiple event lines and multiple narratives, you can bring that political situation and you can bring it through the organisation. You have to be very thoughtful and you have to be very patient. But there are frameworks in the market used by the leading organisation that are good at this. Some examples of good organisations that weren't were GE, who another one is obviously Kodak. There's a multitude of organisations. I've got a slide in one of my packs that shows all the organisations that have disappeared, and they're the ones that didn't do well. And then all the organisations that did do well. So I've got, in my frameworks, I've got the 10 leading organisations best practice and how they do it. And that's what we apply, and that's what I encourage you to learn, is the CFO role isn't the same as it was 5 years ago or 10 years ago. It's different, and it needs different solutions.
So on this one, do you see, and maybe a question for Jeremy, do you think there's a market for revenue strategists?
Well, clearly there's one sitting next to me. But absolutely, yeah. And I think, in a sense, an executive suite is exactly that, right? It's one of their many roles. Is to protect the future of the business for this very stage.
But the idea, to correct me if I'm wrong here, Darren, you don't deal with compliance and cost issues?
No. So my job, so I've got 2 elements to my role. One is about managing our revenue that we have today, and the other is about finding revenue for the future. So we said well, we sat down probably about 18 months ago now, which is pretty much when my job got created and I moved from the CFO role. We said we need to think of ourselves and our strategy in terms of being what we call ambidextrous. And so our purpose statement is about delivering energy today, powering your tomorrow. That's what we put into our purpose statement. So in terms of creating the awareness to kind of the acceptance of the issue, I suppose where we went and said, this is, if we're going to be around, we can't just be this thing, delivering energy today. We have to be both of those things, powering you tomorrow. And just kind of building on that in terms of how do you build that acceptance. One of the first things is to look at some history and some recent trends. I remember being in the industry some 10 years ago, and we said, there were some crazy guys who said this solar panel thing's going to take off. Look at it, watch it and see what happens. And this is in an industry that didn't quite understand what the power of solar was going to be. And so you now look back 10 years in hindsight and say, gee, how did that happen? What did we miss? What were the signals? So I think forcing the organisation to look back a bit and have a look at what trends emerged that you didn't expect is a really clear way of highlighting that some of these things that are just starting to bubble now, so like peer-to-peer trading and the use of Bitcoin and those sorts of sharing things, well, what might they be, and hypothesising what they might be.
We think about it in a very similar way, actually. So if I think about the way we think about the CFO role within Deloitte, so we're a $2 billion organisation growing 15%. So the half of the role is kind of the traditional steward type operator role. So you're looking after finances, treasury, accounting, back office type functions. But the other part, arguably the more interesting part, is this kind of strategist piece around, how are we going to catalyse change, how are we going to innovate. Much of it's through our acquisition agenda. So we acquire a number of businesses every year. We invest significantly in innovation internally, whether by building products or systems, trialling things. So that's kind of the other half of the role. So it's really quite similar to how you just explained.
Now with cost, there's only one way down. With revenue, you can either create more of the existing or create entire new revenue. Now Kotter gave the word change management starting with a sense of urgency. How many organizations, Craig, that you work with have a sense of ambition? And what Sophie talked about was very much look what I can do, as opposed to look what's always broken. So spotting opportunity points. How many organizations over the last 30 years have you seen with a strong sense of ambition where they take actions because they can, and the digital world, the new business models have created so many affordances. We don't have to wait for a pain point to react.
Yeah, well, I guess one of the metrics I found is the chief innovation officer usually has a job for about 14 months, okay? It's not a safe place to be. And I think that's telling on the new revenue lines that they project, is that we're used to being a CFO in the old style. We look at costs, we look at projections of revenue, we look at yield, etc., like that. And we don't look at the metrics that drive new businesses. It might be market share, it might be a bunch of stuff that we don't normally measure. And the successful organisations that do that know how to nurture, know how to metric those. Governance is another issue. How often do they report? The leadership is an issue. What type of leaders do we need in the old business, and what type of leaders do we need in these new businesses?
Can you give us an example, the difference between governing cost versus governing revenue? Where do you see the biggest difference?
Well, just the one I touched on. Governing cost is being digital transformation, lowering, being more productive. It's basically lowering the cost if you're doing business all the time. Certain types of people do that particularly well. Where we make a mistake is we assume that those people were going to do well, in the creative, in the innovation part, and they're different types of leaders. They're different types of people who we have to manage in different ways. And the stereotype, GE is a great example, is that, and Kodak is a great example too, is that the old managers, the managers that are very, very efficient and gifted at managing performance, get transferred over into the innovation business, and they kill it off because they try and apply the same management practices.
Jeremy, the CEO of Bosch recently said, I can cut costs on the inside, but in order to generate revenue, I need to work with external parties. And Sophie said the same. Every experiment involves an external partner. So new revenue at Deloitte, do you create it on the inside, or to what extent do you rely working with
Largely,
partners?
I mean, we try and we work pretty hard at, and it never ceases to amaze me the breadth of what we do and what we offer as a service, as a firm. It's constantly growing, but that's driven by our clients, and we exist solely to work with our clients. So, and in a sense, for quite large, what might be perceived to be quite traditional organisations, actually we're incredibly agile because we just have people. We effectively have no assets. We have some leases and some computers. Our intellectual property is our people and what's in their heads and their capabilities. And so it's very fungible. So we move with what our clients require, and our clients are experiencing all of this, and so we have the very great sort of privilege and advantage of seeing this disruption and this change from a service provider perspective. The other aspect I'd add is that because we're a global organisation, and because in many senses innovation and change happens a little bit earlier elsewhere than it does here, then often we're seeing it, whether it's in the US or Europe, we're seeing it a couple of years before it really hits here. So those sort of broader global learnings, we can bring them here.
So maybe last question for you, Darren. When it comes to cost cutting, we understand lean and cost analysis, got cost drivers, cost owners, we understand Six Sigma and root cause analysis. When it comes to revenue, we have to understand business models. I think St. Gallen University identified 55 business models, but most organizations don't have a business model expert. There are digital opportunities, and most organizations struggle to understand what AI or blockchain really can do. And we've got demographic shifts like sharing economy, but the behavioral economics behind it are often not understood. So when you create new revenue, to what extent do you rely on external partners to have these sort of complementary skill sets?
Look, absolutely. I think for us, coming from being an existing player, one of the real benefits that we can provide is use what we've got and then partner up with others that can bring something else to the table, and then fit that in with what customers are looking for. So a recent example where we have just done a fairly significant retail deal which actually goes over 10 years. So we've been a generator typically. We do some retail, but this is probably one of the bigger ones for us that we've done. Typically, why does it work? So it worked for the customer. The customer's wanting to get some certainty over 10 years. We're looking at it saying we also, for our existing business, want to get some certainty over 10 years. But one of their other objectives is that they want to obviously start to transform their energy source from the traditional coal source to other renewable sources. And we say, well, we can do that, and some of those projects we can probably start to bring in, and other things we can't do well at the moment. And so we've set up a deal that basically represents that and partners other people in to do that with us. So in terms of, so that's one example. Another example, we've done a fairly significant deal with Alinta Energy, which a lot of people would know about, where again, it's a long-term deal where we've looked at what's in it for, what are customers looking for, what is Alinta as a retailer at that end of the market looking for, and what are we looking for, and how do we kind of come up with something that's a little different, a little innovative that can shake the market up a bit.
But can I ask you again, in some environmental sensing, like how do you ensure that you understand the business models that are available? How do you build up external or internal skills around digital technologies?
So one of the roles I've introduced in the last 6 months is a market outlook role. So somebody whose role is to continually to be looking at all the information sources that they can get hold of and giving us a view on what that looks like. We then use a lot of that information to then interpret it into what does that mean for our business in basically the way we know it, and then if we play that out in some scenarios. And in terms of going back to some of the previous comments about how do you get an awareness and a bias for action, when you start to bring some of that in, and particularly as CFOs, and you say, well, if we do nothing, this is what our revenue stream is going to look like. So that original chart you put up, if you back that up with some data and use that insight from that external scan, we've got a chart that looks exactly like that in our business. And then I've got another chart that looks like your next one, which is the one where we've gone that says, if we do these things, and a lot of them we've not yet tested, and we've not yet got to what you would call full business case stage, but that's the kind of path we need to look at.
Thanks. Thank you so much, Darren. Before I open up the audience, the floor to the audience, in the old days we said we need to work out what causes headaches, why can't executives sleep at night? And it was the life of the red line when we knew our problems. What we realize now is we have to work out why people sleep really well and they shouldn't. because we often don't know that this green line will look like this. Ladies and gentlemen, we've got 8 minutes, so I appreciate your contribution. So any sort of questions when it comes to the idea of revenue resilience, revenue strategies, building awareness, acceptance, or actions in that context? And just quickly, please introduce yourself.
Hi, Andrew Bishop, ARTC. Just in terms of structuring to support this, and have you sort of needed to formally set up budgets for a committed program to support that sort of revenue work, where it's going to be obviously challenging to show every month the specific outcomes?
Yeah, so we have. I've formed a team which obviously has. So we've developed what we think is the right infrastructure that we need in terms of, particularly to start with the cost side. We also did an early piece of work, probably about sort of almost 12 months ago, that said, okay, of the range of possibilities in the areas we think we can play, what do we think over 5 years we think our revenue could be? And I've put that into budgets. Now, it's a little bit daunting, particularly for somebody from my traditional background, to say, I've got that number there, I know that it might come from these things, but I don't actually know today how I'm going to get there. And I think that's where, talking about metrics, it then comes back to what are the metrics you have to put in place to say that today I don't have the revenue, but I need to know that I'm on the path to getting the revenue. And so some of the metrics around, for example, that I've got in place now around, we recognise that to actually build some revenue, we needed some capability build. So one of the very first things I'm measuring is the build of the capability. Well, it doesn't get you actually the revenue today, but I think my message would be that if you're changing from what you've got today, which is very much about unit costs and rates of return and things that we know very well, and you're going into something that's a little bit more esoteric and a little bit harder to determine, your metrics are going to have to change, and they're going to have to be around what it takes to get there rather than perhaps what the end state's going to look like along the way.
Yeah, hi, it's Ian Boyle from Queensland Health. Just interested to hear from the panel your thoughts around linking revenue to strategic purposes.
Jeremy, maybe it's like a big.
Yeah, so I mean, well, we have a global purpose, which is making an impact that matters, and hopefully you're experiencing that. You're a client of ours in Queensland, and that, I mean, that's a very neat phrase. It really has become embedded in our organisation. The younger people who join us, they want to be purpose-led, and they want to do more than just deliver work. They want to make an impact, and so we think about that a lot with engagements with clients, and you'd be a great example where you can very tangibly see, in your case, perhaps a social impact of the work we do. So absolutely, we try and translate the work we do into a meaningful purpose. And
Craig, you might have 5 cents on this one as well, I guess.
I think you've got to look at every angle possible. I think Jeremy, you mentioned acquisitions. If you look at any industry at the moment, and right across those industries we looked at before, and look at the multitude of acquisitions, say 5 years ago, 10 years ago, and now, it's ridiculous. It's you get star charts that say 5, 10, 50 when you look at the big American corporations. And I just use that as an example of the multitude of ways that you've got to expand your horizons in order to understand how you might cope with and create revenue resilience. I've seen a few large organisations, and they're in this room, who double down and double down and double down on the same revenue line, where they have the money to acquire things but don't do anything. So I guess that's another angle.
Yep, and just one more comment. Like, often we think about strategy first and everything else second. I guess what happens in the world of revenue spotting, sometimes you see the new revenue and that might extend your strategy. So talking about Queensland and health opportunities, we work with urban utilities. And in the world of digital revenue, we put some sensors literally into your toilet and create a smart toilet. We know more about your diabetes, kidney, or hangover problems than anybody else. And here becomes a water company because of digital opportunities, a provider to the healthcare industry. But nobody in the strategy section said we should conquer the health industry. So I think getting used to that strategy is not always the first item on the table is something that might require some change.
It's also changing the order of things. There's a lot of habituation in the CFO role where everything, end of third quarter, all the budgets are handed out, and they're handed out to everyone first. You know, start in Q2 or earlier, and look at all your innovation programs and the budgeting for that first, and allocate the resource and responsibility for that first. Then after you've got that lens, then go after your traditional franchise business. Prioritise it first.
Okay, talk about this. So we seem to be risk obsessed, compliance obsessed. How many revenue obsessed CEOs have you met? Give us a percentage, yeah?
I think it's less than 10%. And I also think there's a problem with the risk frameworks that we're using in this country compared to other countries, and I'll talk about that later today. I think what we're doing is using a risk matrix or a risk management system that, to be honest, is obsolete.
So I've got time for one more question, I think.
Make a comment on risk. So risk, to my mind, is about risk of achieving your strategic objectives. One of our strategic objectives is to create new revenue, so it's on our risk framework. So you talk about being obsessed with risk. If you've got risk frameworks working for you in the right way in terms of what you're actually trying to achieve, I think they can work for you.
It's a smart way, yeah. There's a last question, yep.
Traditionally, organizations have been using technology only for the red line. I mean, cost, optimization, efficiency, so on and so forth. What are organizations doing in terms of utilizing technology for revenue resilience? Have you seen that, or any KPIs on that front?
So using technology for revenue gains?
Yeah.
I think, well, I can comment briefly.
Finding new business model, something of those sorts?
Yeah. So I think technology creates, in our business, so we've just talked a moment ago about a particular new deal that we're going into. One of the reasons we could sell that deal is because of the technology offering that we're providing to customers in terms of their ability to interface through portals and the kind of information it gives them. So I suppose, you know, my mind is that there's a big place for technology in terms of customer offerings. In our industry, technology is actually leading revenue change. So new technology is coming in for distributed generation, for solar, for wind, for battery, for behind the meter. So I think we look at those technologies that says, okay, the technology which we're used to, the thermal power technology, is not the technology of the future, no matter how you position yourself. So you actually have to become aware and position yourself for this technology. So yeah, I suppose it's in many ways. I don't think technology just relates to the cost line of the equation.
Thank you, Darren. So that brings us to the end. So I'd like to thank Darren. I'm sure he will share his job description if you have an interest. Jeremy, great to see that organizations that are on the left are remaining confident and proactive. And Craig, we are delighted to see more of you. 5 seconds left, German precision, 11 o'clock. Thank you so much.
We're 2 seconds early.